Is it good for everyone? We're going to start now. Okay. Send tap zeros in the chat. Press OK. Press the thumbs up. Everything so I can see you can hear me and everybody's ready, please. So we are going to dive because this session is very special. I want you to understand how to link the strategy that I taught you with the indicator. Okay. Yeah. So let's go. First of all, I want you to remember, you know what market structure is, and please, you need to mute all your mics, okay? I don't need mics that please mute your mics to help others so we can all hear what I'm saying, guys. Okay? You need to mute your mics. Okay, thank you everyone. Okay, let's go now. So, what I was saying here is I showed you how market structure work, okay? Let's first of all take off all the indicators and just to keep a naked chart like this. I apologize if the screen is different. I usually use a white background, but today I'm doing this for the sake of the indicator so you can see properly what I'm doing, okay? So market structure is simple, okay? Here I'm on M5. I can go on M1. Here I can go on H1. I think you all know what time frame is. I can go on H4. Whatever I choose, market structure it look the same. It's fractal, okay? So the way you find the break-off structure, the way you find swing highs and swing lows, fake outs, okay, and breakouts is the same way, okay? So to understand market structure, I told you you need to mark 3 lines. You have the first line here, you have the second line, and you have the third line. Wherever the market is, you choose the H4 or the daily to find your daily bias, okay? If I'm on the daily bias, right, like this, let's see this. Okay, let's choose the daily bias, okay? The daily time frame. The first thing you must look for is the last break of structure that you can see. Where is the last break of structure? Okay, I'm looking for the last break of structure. It's an exploration. You should explore. You can go here. This is a high and this is a low. Where did it break? It broke here. Okay, is this a valid high or a valid low? Yeah, I think. Why? Because it broke another high here. Okay, so now I have a market structure, okay? I have a high, I have a low, sorry, and I have a break-off structure. What is the break-off structure? The break-off structure is here. Break-off structure, okay? That's the first thing you should do. You should understand where you are in a range that you're trading, okay? The market structure is the first thing that you will look at, and you need to think about where you are according to premium and discount. Then you take that range from high to low and you split in two. You can use the Fibonacci tool or you can use the Gann tool. It's the same thing, just something that will help you divide this in two. And once you divide it in two, now you have premium and discount. When you have premium and discount, you know in this zone you have to sell and in this zone you have to buy. Good? We can do the same everywhere. Like imagine we did not have all of this and we were still here. We were still somewhere like here, okay? What was the last break of structure? It was here. Where's the last high? Here. Break of structure here. And where's the low? The low is here, okay? You have your range, right? You have the break of structure. So you have your direction, but you must also check if your direction is right. You remember, What do you have when you have equal lows? You have liquidity. So these two levels are weak. What do they need to work? Okay. What do they need to work as a team? Because they are weak. Okay. So every time you see two levels, it means the price refused twice. Okay. And they tried to push twice. And when you see that, you also expect to see price come and break these levels because they're weak. Okay. So market structure and liquidity work together. Here, I'm showing you the market structure. You could think that this one will work, okay? And tell yourself, okay, price will not bounce here. But price already tested here. You remember what I told you. If you mark your premium and discount zone, okay? If you mark your premium and discount zone, you know that price should react inside the discount zone to go higher. What will price do here? Boom, broke structure. Why? Because of these equal lows. Now, you know equal lows doesn't work, okay? It cannot stop price. You can mark their liquidity, okay? I can mark like this, liquidity. I know this zone is taken out. Now, this is a new break of structure, you see? And now I'm waiting for the candle to engulf a bearish candle. If I don't have something engulfing a bearish candle, I don't have a, okay, here I have it. You see, this engulfment confirms that I have a swing low here. Now I have a swing low, market structure has shifted. We were going lower, now we are going higher. But the problem is we are still in a bearish trend. The range is coming from up to down because we broke down. We did not break up, we broke down. So you could expect price to reject in a zone here to keep selling, okay? You can miss once or twice, but out of 10, 8 times you will be right. So let's see if price will do it. You have also your ranges. We will see that the next time, but today just keep your mind on premium, discount, and the swing high, swing low, and the break of structure. Easy, right? We have the high, the low, and the break of structure. And this premium zone here and discount zone. And then we can see how price react, okay? Price broke structure and engulfed this candle. So now this is a reversal. We have a reversal inside here. So this was just a retracement. Retracement means what? Price was not going that way. That was just a pullback. The real trend is this one. So at this point, someone can take a sell and it'll be right, okay? You see that? If someone came here, it took a sell here, it took a sell, and then target maybe this level or here, I don't know, but boom, you see? Now price took him out here after this move. Remember, these are daily candles. So if you find a day like this, this is like 1, 2, 3 days in profit. You could have closed your trade already, okay? Now, after here, what do we have? We have a new high because this candle tried to break here. So we have a low. We have this is an internal break of structure because our high and low are still the same. Until we break them, the structure has not broken. Inside here, we can call this an internal break of structure, okay? This is an internal break of structure, like this. Internal break of structure, okay? We know it's internal. Why? Because the main structure is here. And as you know, combining this, we came back inside the premium zone. We found a level, a key level here, and price rejected from there, okay? Same again here. You can see these are days. If you find a day like here, you know the next candle is bullish. You see, that's where we are. So now, you know, we did not break this structure here. Okay, we did not break this structure here. We stayed in the range. Okay, we rejected. We are still in a range. And that's why sometimes they can tell you price is moving in a range. It means it did not break either the high or the low. It stays inside. Okay, but with the BAZ indicator, you can still trade whatever happens. Okay, so now I'm going to show you here. This was just a reminder on how to mark the market structure and to how to find your swing highs and swing lows, to remember premium and discount, and always look at what the direction price broke. Okay, because this is where you're going to consider a sell, because we broke down. When we broke up, okay, when price arrived here, we saw a liquidity zone, so we did not confirm there. As soon as price took out this liquidity, what did price do? It gave us a buy. So everyone is right. It just depends on what is the timing that you're considering and at what time did you arrive in the market, right? So now you have seen this, and remember what I told you. You should always consider how the candle closed. As you know the market structure already, like we marked here, remember now in yellow we're gonna put lines of how the daily candle closes. This one here, do you see the candle here? This one opened somewhere here, created this high, and then came and closed here. Next day, Thursday, candle came and closed inside, rejected the idea of continuing lower. So price closed inside. We could already expect that the NFP would send the price higher. Okay, I will show you later how the BAZ indicator could predict what the NFP did, because if you know how to use it, it can help you find the direction. So here you see how price broke structure and closed in a breakout. So today on Monday, now I'm going into the main part of this call. You see, this is the daily time frame on gold. Okay, let's drop on H4. What do we see when we drop on H4? Always look for the last break of structure. Remember, this was the last break of structure. Where did it come from? It came from here. Okay, what happened before? We took out liquidity here, and then when we closed here, we can call this a change in direction. I already told you this, but I think we're gonna talk again about it. Don't worry about it. So here was liquidity. We have a liquidity sweep. Okay, from this liquidity sweep, price tried and stopped here, couldn't continue higher. Then from this demand zone, price came and broke structure. When we broke structure, we confirmed our direction. Okay, this is H4. So now today, after seeing this, how would you trade? Okay, you would come first of all, after finding the market structure on H4, you would come and drop on M15 or M30, but let's do M15 because I know everyone wants M15. And now we can activate our BAZ indicator. What I'm going to show you here is just how you could anticipate price with the BAZ indicator. Okay, we have the change in the state of delivery or the change of direction confirmed after breaking this level. You remember how we marked it when we were on H4 time frame. Okay, so this is the beginning of today, Monday. Here you see the blue line, and here these are days: Friday, Monday. Okay, I hope everyone can see it clearly. Now look at how BAZ indicator showed you the levels you should trade. Okay, now I'm going to activate another indicator that I use just for the sake of explaining, but I want you to see it. I'm going to open this. It's a multi-time frame. It's H4 candles. I want you to see how the H4 reacted. And remember what I told you. The market structure is fractal. The candle theory that I taught you, how the candle forms with open, high, low, close, or open, low, high, close, it's also fractal. So when price created this move here, it was this move here. Can you see it? This move first, okay? Secondly, price rejected after here. We opened the new candle here. You see where we opened? Here. We created this high here. Here. Do you see that? And then price retraced inside the range. What I'm trying to show you here is, if you can see your candle, then you can see the moves inside. When the price retraced and stopped and closed bullish inside this range that we had here, it closed bullish. It means it's closed somewhere here. You can see the lines. And it opened somewhere here. What did price do on the next H4? I'm expecting a bullish candle. What should I see? I see the price open first, create a low, and then give me what? A high move. Now, after this, remember the candle theory. I'm not interested to going lower. Price tried to go higher and then retraced inside and stopped here. Now, the new candle opened, okay? This candle is the 6-hour candle. When it opened, what happened? Price created, first of all, a push up, a push down first, then a push up, then another push down, and then a push up, okay? And here, it's 10 a.m. New York time. I'm trying to show you here. This is gold. I have to show everyone. I'm not going to show only the opportunity we had in New York. I'm going to show London and Asia too. And this is how you could trade any session with the BAZ indicator. So first of all, when the market started creating this bearish move, let's go on H4 so you can see it. You see it? This group of candle here, I want you to see this group of candle is the same as here. I'm going to squeeze them down so you can see, squash them here so you can see the same shape, okay? Just look what happened before. Look what happened before. This candle rejected price here before closing, and then we came and closed in the breakout. After closing the breakout, what do we expect? A buy. But what did price do first? Created a low today, and then what? A high. But when you know that, you are expecting a bullish candle for the next day, because if I go on the daily candle, what did happen yesterday? We closed in a breakout again. You can see it here. We closed in a breakout, and we close in a breakout here. So today we expect to see the price move up. Even if the candle will not end up being a bullish candle, but the move will happen. So I'm going back on H4 first so you can see it. Once price opened here, you have this candle form. And this candle form, let's go on M15 now, from the blue line here, which is 1800 New York time, we created a low. What did price do? Price went straight into a BAZ zone. You can see that this is another block. And when we touch this, okay, what could be our stop loss? Either you protect below the the change in direction because it's a validation point. If price come and take us out close below this, it means we were wrong anyways, so we deserve to lose. But if we have to protect a logical stop loss, it should be right at this level, or at least from this low here below this BAZ zone. Okay, when you have that, this was at what time? Asia session. Okay, Asia session, you target 3R, and before even London to close, you are already out with your profit. You see that? Now I'm going to show you now the second opportunity we had. I need to put red here so people will understand that it was a buy. I'm going to show you now what happened in London. Now look in London. Let's forget this opportunity first, okay? Now I'm going to show you something. Look at these vertical lines here. You see this one, and this one, and this one, and this one. These are H4s. H4. Now I'm going to switch off this indicator that I used to show you, and now you don't see nothing, right? But let's mark our own levels. We have here 2. Where's 2? Yeah, 2 vertical line on 2 plus 4, 6 plus 4 again, 10. Okay, now look at this. We have these hours. Whatever happens, these hours will always be there. You can mark them even before price create anything. Now look how the candle formed. Remember, this was the first H4 candle. It came and touched our BAZ indicator. Now at this point, we don't know what price will do. We don't know if price will continue lower or if price will return and continue higher. Okay, what was marked here? Buy side liquidity, because it's a decision point. When you find buy side or sell side liquidity, there are decision points. When you see price come to the buy side liquidity and take it out, you should wait to see the next candle before you close your trade. You see, why do I say that? Because if you took a buy here and then at some point price reached this level, where were your stop loss? We said here, or let's put it here for the greedy one. Now what price did, when we reach this sell side, this buy side liquidity, we are out of the trade. Okay, now let's say Omar Robinson, that is in this call, decided to buy during London. What is London candle? Because remember, these are H4 candle. H4 plus H4 plus H4 plus H4. And what is inside is M15. These are M15 candles. M15 candles. They form H4's candles. Okay? We are just looking at the lower time frame, but we know the beginning of H4, H1 and M15 candles, but we are marking here the H4s only. Why? Because they can help you understand the division and how the day is subdivided. So now here I'm having this. Look, we have the retest in Asia. Now in London, after this, after 2 a.m. in London, we have something that happened. You see this consolidation here? Something happened on the lower time frame. When you come closer, you can see it here. Let me take the indicator off for a while. Now here you have this sweep. You see that? And you have this liquidity. Look at how many equal highs have been taken out. 1, 2, 3, and 4. Look at what price did. price left at a fair value gap. This is a sign you should take a buy. But let me show you where the indicator comes in handy again. After this, the indicator marked, so we had, first of all, an order block that we used. Secondly, the indicator gave us an order block that's not used for entry, but used as confirmation. Because we know our order block will not get broken. So if this order block created this fair value gap, now let me mark the fair value gap. We have the fair value gap here. This was the second trade. Okay, as you see now, your fair value gap is here. Price returned inside, okay, touched it and went up during London, right before we open New York session. So you have another trade that was possible today. And remember, this is an H4 candle. So you know this was a H4 low, H4 high, new H4 low after this break of structure. Where will you put your stop loss? Below this H4. Why? Because if price comes and take you out here, we were wrong anyways. So we don't care, okay? You can be wrong or you can be right. There's no problem, okay? We need to get over this. We don't need to stress because we lose a trade, okay? We need to respect our plan and understand what we're doing. Now, look at this. I will go back on a higher time frame because I need to find a target. You can see now here, you have this BAZ indicator here. It's created another zone, okay? But you also have another fair value gap here inside, okay? You need to understand what you're doing. Now, when you go back on M15 and you see the trade, you will target this place here. This guy was your target, okay? I don't know if price reached it, but this one was your target. It's a 2.6R trade. But be careful. When you come on M15, now the BAZ indicator can help you because the green one is order blocks and the gray one are order blocks or breaker blocks, okay? And when you see that, you have the breaker block here. When price come back and reverse on a breaker block, you need to be careful, okay? Why? Because when price came here, touched this breaker block, it went straight back down. I don't think price will return lower than this level, but I guess even if price come back and touch this, we are targeting what? We are targeting this fair value gap here, okay? So we know where we are going, but the indicator, the BAZ indicator can help you know when to take your partials. So here you have your TP1, okay? You have your TP1, and maybe here you put your TP2. And somewhere here, after the break of this level, you could maybe put your stop loss at break even or leave it at it is, but because sometimes you don't need to put break even. If the price come back and touch it, you are out, and tomorrow price continues and you regret your decision. So you see how the BAZ indicator act as a level to enter, then a level that confirms, and then a level of target, okay? I showed you this because next time on Wednesday, I'm going to teach you how to take entry without the BAZ indicator. And then when you are going to activate the BAZ indicator, it will be easier for you, okay? You will make less mistakes because the BAZ indicator is already marking the valid levels. Because all of this, if I just take everything out, all of this is just market structure. Remember, this is a low, this is a high. This was what? Premium and discount. What did we have here? A drop. But this drop respected the discount level. And then when we broke this structure, again, price continue higher. But when we broke a structure and we sweep liquidity, what is it there? We know this is a demand zone. Okay? We know how a demand zone form and how a supply form and how a supply zone form. So demand zone, supply zone, and how to enter from there, I will show you next time. One thing else that I will have to show you is how to use fair value gaps and understand if a fair value gap will resist price, or if it's broken, price will continue. Okay? Not all of the fair value gaps that you see are respected. Even on a lower time frame, the fair value gaps are broken sometimes, and sometimes they're respected. Look at this one. We have a fair value gap here. Price rejected. We went straight up, and then we engulfed. After engulfing this candle, I can come even in 1 minute. Let me show you. Let me show you this one. It's a tip. I can come here. You see this M15 candle? Let's go in 1 minute now. I can show you how you can take an entry on M15 using the M1 time frame. You see, this was the beginning of our M15, right? What did price do? Price opened, created a high, came back inside this fair value gap. Even on M1, you have another fair value gap here. So you can confirm a fair value gap with another fair value gap. You have a fair value gap here, okay? And from here, price rejected straight up there. So this was also a scalp for someone else, another strategy. You could have this and then target this. Hey, more profitable trade, but it's more riskier, and you should also think twice before taking this trade. I will show you how to use it. I will show you how to take trade on M15, on M5, and on M1. What you should look for, and always remember this. All you see here can be divided. So always find the 0.80. Where's 80? 80, 80. Where is it? It's here. Boom. This is the beginning of an hour. So you already know this was a consolidation. This was manipulation, break of structure, confirmation in this demand zone. What did the BAZ indicator do? It gave us a level, and then boom, you buy. Okay? Always find the 0 point. Okay? The 0 point will help you understand what the time is doing, how the time is divided. Okay? If you find 8 a.m., then you find 9 a.m. Where's 9? Where's 9? Here. I found it. Okay? Look at what price did. Created this, then a sweep, and then close here. What do you expect for the next one? The next hour can be bullish. Okay? So if you come here and find 10 a.m., someone who came at 9 a.m. at the close after this break of structure and took the trade on the BAZ indicator and closed at the end of 10 a.m., he took a scalp and it was positive. Do you see that? If you understand the formation of a candle, if you understand the formation of the candle and you understand market structure, you don't need anything else. And if you use the BAZ indicator, you just make your life easier. Okay? Always use this vertical line and the horizontal line to know where the market broke. Okay? Those fancy indicators we see online everywhere, they don't mean nothing and they don't do nothing. They just say the same thing that we are doing here, but just in more complicated words and terminology. You see, if I go back before 8, it was 7, right? Where is 7? 7 is here, right? What price did? It was a bullish move. Why? If you go at 6, we had what? We had a sweep. Everyone can see it here. We had a sweep. This sweep of liquidity here, once we broke above it, the above indicator gave you another zone. And after you see that zone here, okay, you could buy the next hour. The next hour is here. Here you see a sweep again. Buy the next hour. Do you see that? So I hope everyone understood what I'm saying here. I showed you how to divide the time. I reminded you how to use market structure, and always remember how the candle forms. If the candle have to go up, then we need to see a down close first, and then the candle continue. This is a 2-hour candle divided in two, 1 hour, 1 hour. Okay, so you don't need to stress. This is what I had to show you today. On Wednesday, please everyone be there. I will show you how to take this kind of trade by yourself, and then I will remind you how to use the indicator. Thank you everyone. I hope this was of a great value to you guys, and this was what we could do today to gold. And yeah, I hope you learned something, and I hope it was easy to understand. Thank you very much for everyone. Type zeros in the chat, please. And
Emma,
yeah.
Did you record this?
Yeah.
Oh, yes. I'm gonna send you a message.
I will send it. Just text me. I will send it. Okay.
Okay. I forgot you were coming on.
Thank you. Thank you, everyone. Thank you.
Thank you, Emil. Yeah, Linda is my sister, so she's gonna get it for the both of us. Thank you.
Okay. Thank you. Thank you. Bye, bye, everyone. Thank you. God bless you.
Bye.
Okay.
Call me, Linda.
Okay. You can DM me in the app, the Cycle app. You can DM me. You select my name and then you message me in the app. Okay? Thank you, everyone.
Okay.